Hi everybody. It's the weekend again, and it was time for me to get round to doing my weekly analysis to find out where I was likely to want to be trading next week. One of the things that became obvious to me was that the US dollar index chart indicates a move to the downside quite substantially from where we are now at a price in September of 2018. This market wants to move down. Now, I would suggest that this market will move up first and may find a resistance area somewhere up around 99 cents. It would not be unrealistic that this could happen over the next 6 to 12 months. But that for me, that $1 or that 100 mark would be, as I say, not totally unrealistic. However, having said that, the prognosis for the dollar, for me, over the next 2 to 5 years is a downward spiral. And as you can see, I've indicated on this chart by putting a downward arrow here. These are the two areas, whether they be 3 years or 5 year targets, where I would anticipate that the US dollar index will fall to after an initial push higher than where we are at the moment. Now, it could happen almost any day. This feeds into this paranoia that we are due for a major collapse. I'm not sure that I subscribe to that kind of theory. However, the simple monthly chart on the US dollar index suggests to me a major downward push. What I would like to suggest to you is that somewhere in this area here is where we are likely to see this market coming into before reversing and heading down. As I say, it could quite easily come back up into this area in order to become a sell. It's a monthly chart. That could be 5, 6, 10 bars, so we could end up during the course of the remainder of 2018 and the first half of 2019 could be more pushes up into this area, but the prognosis is not good. This market wants to fall. This market wants to have a major collapse. So the US dollar looks like it's going to be toast for up to the next 5 years or maybe even more, but certainly down into those prices. So depending on how fast it falls, I'm saying 2 to 5 years based on a simple diagonal push. If it took that, then that's 3.5 years to get to that price, and that's 4 years to get to, well, it would be more than that. It would be probably 5 years or more to move down into this price. So for the next 2 to 5 years, the US dollar is likely to be toast after an initial rally, a push up into this area here. I'm not sure that that'll happen. However, let's see if we can confirm this by looking at all of the majors and see if we can get a directional bias from, say, the euro, the pound, the Canadian dollar, the Aussie dollar, the Japanese yen, and the Swissy. So what we're looking for is those 6 majors to confirm that this market, after an initial rally, is likely to pull down into serious areas. Okay, so the US dollar in itself indicates that we're likely to get a push down. Let's see if we can confirm that. Let's move to the euro monthly. I'm using monthly charts here because that's how I start my top-down analysis. Okay, now because currency pairs are measured, are calculated, should I say, against each other. We had the euro versus the US dollar. That means what we're looking at is the price of the euro. Is it likely to fall or rise? Okay. So let's reverse the situation that we had with the US dollar in itself. We imagined a rally back up into this area over the next few months, and then finally a push down into this area here or this area here over the next 24 to 60 months. So that would be 24 to 60 bars. 60 bars to get us down here, not unrealistic. 24 bars to get us down there after an initial push higher. So in other words, in order for us to start to break down here, we would need to first of all find an area of resistance. For me, yeah, there it is. So I'm not unhappy to see this market come up here over the next 6 to 10 bars. So by the middle of 2019, this thing will have hit a wall. Okay, now maybe right now and we'll fall away from here, I don't know. But I'm looking at this and suggesting that it's quite possible that this market could rally up into that area between 98.5 and 1 or 100. Okay, so that's the anticipated move. So any currency measured against the US dollar is likely to benefit from this. So the direction from the indications given by the US dollar index, the value of the US dollar itself, is that it's likely to fall over the medium term, medium to long term. Okay, based on that, any currency on the opposite side of the US dollar should benefit from a long push. In other words, the price should go up. Looking back to the euro, here we've got the monthly. So we're anticipating that if the dollar is going to be down, then the euro should be up. All indications are there is a possibility that this thing will continue to fall down into somewhere like this area here. And that's not unrealistic. However, what I would suggest to you is that the more realistic picture is that if it's to fall before rising, then it's likely to come back into this sort of area here and then move higher up into a dollar, close to 150, €1.50 to the dollar within the next, let's have a look, within the next 24 to 36 months. I'm seeing the euro being something of the order of 148 to 150. Yeah. So that's where I would anticipate this market going. And the target price for that, for me, should be here. And that says 147. Okay, that's where I anticipate this market reaching for over the next 24 to 60 months. Okay, now let's look at the pound. See if we get the same idea. On a monthly chart, the pound has been falling like a stone. It's been caught up in Brexit, which is this area here. It has fallen consistently. It's trying to accumulate to get out of this position. Now, what I did was I put what I consider to be the major support level at which it was going to try and turn. And you'll see that more clearly if we look at this. Okay, now that price should actually be somewhere of the order of 125. So the value of the Great British Pound has fallen to that of $1.25. What I'm anticipating now is a major move to the upside, and the first target for me would be somewhere of the order of, I don't know, the first target for me would be 152. So it's quite a long way away. I'm going to zoom out one little bit. If that market was likely to have an upward bias for the next 24 to 48 months based on its current price, then I would suggest to you that your 2-year target is this, and your I can't get the angle on this because it's too far up. I don't want to have to mess with this. Alright, let's try it. Okay, so my belief is that this market will take out that price in the next 24 to 48 months or 60 months. From its current price, if that market moved up in orderly fashion, then it would take 48 months to take out that high. So for me, not at all unrealistic. Not at all. 48, there's my 60-month target up there. So I'll just pop that in and you can see where I'm assuming. So I've got the Great British Pound as being worth close to $2 within the next 5 years. Okay, let's look at the CAD. Now this one's different because this CAD, because the US dollar is the first currency nominated, then what we have to assume is the opposite. Now remember, we saw the US dollar having a negative bias. In other words, that price should go down. So let's see if that is the case based on the loonie. Let's see if the chart for the loonie on a monthly basis looks like it has weakness and may continue to fall. Okay, for me, after an initial push up, this market looks weak. Yeah, for the last 12 to 18 months, the US dollar has looked weak and unlikely to continue higher. So my suggestion would be that I would anticipate areas in this zone or in this zone on a longer time frame. I don't think this market is likely to want to find a place to turn until it gets down in here. So in other words, the value of the Canadian dollar is likely to rise because the value of the US dollar versus the CAD is likely to fall. Yep. Okay. Let's continue. Let's look at the Aussie. So if we look at the Aussie monthly, that chart should be pointing up. Okay, and for me, it is. There's a major flip zone in this area here. And that's where we are now based on this coming back to somewhere of the order of 70 cents. And I think that's a bottom for the Aussie dollar. Now, if I am being perfectly honest, the major resistance area is going to be like somewhere here. Yeah, I think we will break this trend line, and I would anticipate a break of that order. So what we're looking for is the value of the Australian dollar to rise somewhere between 24 and 60 months. Let's have a look. From where we are now, after an initial push down, maybe even taking out this low marginally, right, down into about that area. I'll put another box there. I'll put another right. Anticipate this. Oh, hang on. Anticipate this market falling into that zone over the next few months before rising and pushing higher. If that be the case, over the next 24 to 60 months, from the current price, with a move down and then a further move up, 48 months is this area, 60 months 48, 56, 60, about that angle. So somewhere in this area here is where I would anticipate major amounts of resistance, and that's 56 bars away from where we are, just drawn on a projected angle. But certainly there's an upward bias to what we have right now. Okay. And you can ask why. It doesn't matter. It's for me, it's unimportant. Now, here's another one just like the CAD, which starts with US dollar. So what we would anticipate is this market weakening and looking like falling for the next 2 to 5 years. And on a monthly basis, this market looks to have done a big push from a low back in 2010. For the last 8 years, this market's been going up. Then it had a major pullback. It's come back up, and I would again anticipate that there is likely to be an upward push to begin with up into this kind of area here, and that says 16 months, but I don't think it's going to take that long. Within the next 12 months of this Trump administration moving the US dollar price to the upside to anyway, then after that I'm anticipating a major fall, and 4 months gets us with the US dollar, Japanese yen down into this kind of territory. And there's not much in between to stop it. There's an area here, yeah, just a little bit higher than that. There's an area here which for me is the major flip zone, which if this market is to fall, and we don't know, this is just my analysis. If this market is to fall after rising a little bit, then I'm going to assume that it's going to fall from here. Now that's 3 years, and that's 5 years almost. So that again has a negative bias. After an initial push up, this market is likely to fall into either this zone or this zone for me. Okay, and last but not least, we need to go across to the Swiss franc now, because the US dollar is at the front, just like the Canadian dollar and the current chart, the Japanese yen. We would anticipate a negative bias. Let's have a look. So after an initial push up, after an initial push up, we would then anticipate a major push down. For me, this market could reach up into 107.5 based on this current consolidation, and then run out of steam and head back down again. So after an initial push up, we're then looking at a 24 to 60 month push down, and that's where I think this market is heading. My bias for this, I see all of these stops, institutional stops sitting above, and I think all of those are going to be taken out. This market is then gonna, it'll be like a false breakout, and this market will resist that kind of price, and somewhere within this zone is likely to take a major dip. So that's my analysis of what I'm seeing happening with the US dollar and US dollar crosses over the next 5 years. So these are very long-term charts. What I'm getting is an overview that this market is going to want to fall, but In order to do that, first of all, it has to go up from where we are at the moment in September of 2018. I would anticipate that by the middle of 2019 we'll have arrived at this area here, which is the early part of the resistance zone. And from that point I would anticipate, if all of the other US dollar markets are correct, then it'll take 6 to 12 months to get up in here, and then there'll be a major push down again. Okay, so that ends my analysis for this weekend, but it's a big picture view of the US dollar and where it's likely to go. So from an international point of view, I see Europe and the Asian Pacific region as being strong against the US dollar. This is not a fundamental view, this is a long-term technical view. But every single chart, every one of the majors is giving a strong indication that the US dollar is likely to fall, and the US dollar chart indicates the same thing, that it may get up into this area over the next 6 to 12 months. There may be a recovery. This could actually be the death knell for the US dollar for the next 2 to 5 years, but it may push higher in order to go much lower. That's the US dollar itself. So if that was the case, then the US dollar Swiss franc would go up in the interim, or it may even fall from where it is at the moment, but it may go up in order to go down. I have a sneaking suspicion that this market is just heading down, and that would translate into the US dollar just going down, not going up any further, just going down. Okay.